talk about the timeline. Discuss the timeline on the entire pre-approval process.
Absolutely. So, assuming your credit and your down payment are ready to go and you're in a good position, we can pre-approve you right away. And what I mean by that is you want to figure around 1 week. And what that entails is we're going to review your credit. We're going to review what you tell us you make. Based on those two pieces, as well as the money you have for down payment and closing, we can reverse engineer it and say, here's about how much you're going to qualify for. 300,000, 400,000, whatever the amount is, you've got the financials to make these numbers work. The next step, though, in what a lot of lenders are dropping the ball on lately, as real estate pros will tell you, is they're not taking the next step of the pre-approval, which is verifying the information. If you tell me you make 50 grand a year, I may look at your pay stub and you only make 47,000 a year, or you make 58,000. You know, people just have this very general way of talking about how much money they have in the bank, what their credit is, how much they have, in income. So we need to verify that.
Do investments count towards that? What if somebody has whole life insurance?
Absolutely. We're going to want to get all of the information on your investment accounts, your bank accounts, not only the money you're using for closing, but also what we call reserve, which is money you're going to have available after closing. A lot of loan programs, especially if you're buying a multifamily house or an investment property, they're going to require that you have money after closing. You can't clean out your bank account to zero. The underwriters want to see that there's money available after to help with, especially in multifamilies, if your tenant doesn't pay. Can you still make that mortgage payment? Do you have money in the bank in an investment account? Like you said, whole life insurance.
So have that first. Have your whole life insurance prior. Have it before you get your mortgage.
Whole life insurance is a sophisticated financial tool wealthy have used for years. I would say most first-time buyers in this market are not coming in with a whole cash value life insurance plan. It'd be great if they did, but they're not. I'm more talking about savings, money market, 401k,
yeah.
IRA, investment accounts, your brokerage accounts. That sort of thing. That's the most common. And a lot of people don't realize or understand that they can use those investment accounts towards the reserve. We're not actually taking money out. We're just showing you have it available for a rainy day, for an emergency. So that's what it's all about. But figure a week. Once you get me your documents, a couple days later, they'll be very thoroughly reviewed, and then we can issue a full pre-approval. So I want to make a distinction here. If somebody is giving you the ability to buy a home to say you're approved for a mortgage just based on a conversation, that is not a pre-approval. That's what we would call a pre-qualification. In this market, it's not going to get you very far. It really isn't. But if we take that next step, which every single mortgage professional I know that's been doing this any good length of time that knows the game is going to have you verify your documentation. If they're not, it's a red flag. They need to verify your income. We'll talk about different types of documentation here, but income, assets, credit, like I said, we need to look at everything on paper, and then I can issue you a pre-approval, and I can put on there, I verified your income, I verified your assets, I've done all this, so then when I get a call from a realtor saying, hey, we just got an offer from Joe Smith on this property, what's he all about? What's your relationship with him? I can tell them, I vetted you. You got great credit. You have the income. I verified your assets. You got plenty of money in the bank. You have investments. It's going to put your offer at the top of the stack. That's what you want. And 1 week is what I'm talking about from the day you call your lender, your advisor, until the day you get the pre-approval letter in your hands. We're talking about, it could be less than that, but be prepared for about a week. I've had people call me on a Monday, give me their documents on Tuesday, and they have a full pre-approval on Wednesday. It can be that quick if you're dealing with a real professional that knows how to do it, but anticipate about a week.
Wow. Speaking of those documents that you just mentioned, what kind of documents do I need to have prepared for our meeting, let's just say?
Sure. So
in advance.
You definitely need to have your government-issued photo ID. No matter what your scenario is,
driver's
you have
license.
to have driver's license. Also, if you're here on a green card, you can absolutely get a mortgage. We need to show that you're a legal resident of the country. Green card is the most common, both sides of that green card. And just like you said, identity documents. Some people don't have a driver's license. They have a different type of government ID, like a passport. It's absolutely fine. It just needs to be a government issued photo ID. So that's your identity documents. The next thing is going to be if you're a wage earner, if you're someone that gets a paycheck stub every week from your job, we're going to want to see a month worth of pay stubs, the most recent month. So if you get paid twice a month, that'd be 2 paycheck stubs. If you get paid every week, that'd be your most recent 4 paycheck stubs. We need the entire pay stub, top to bottom. We need to see the year-to-date information, your name. Some people send me like a screenshot of a half a pay stub that just shows what they made for the week, or it shows a direct deposit into their bank account. That's not going to fly. We need the entire paycheck stub. Most people nowadays can get that from an online portal through their job where they have their payroll. The next thing is going to be W-2s. Again, if you're a wage earner, which most people are, it's going to be your most recent 2 years of W-2 forms. So, 2019 and 2020 W-2. Not necessarily the whole tax return. We don't necessarily need that if you're just a wage earner, but we want the one-page W-2. And that is the form that you get from your job saying how much you made that year.
What if, though, somebody just received a promotion, they got a significant raise, but it's not reflective in their previous W-2 and certainly not the one from
That's
2
fine.
years prior?
That's not an issue at all. We'll get a job letter from your employer saying what your raise is, and then we can use that. Happens all the time. People are always getting raises. The other thing would be bank statements. You got to have, like we were just talking about, reserves, assets. That would be all pages. A lot of people make the mistake. They give the first page. It shows they have 13,000. That's not what we care about. The underwriters are looking at all the pages. Where are the transactions? Where'd the money come from? What's going in? What's going out? All numbered pages. If it says page 1 of 12, we need all 12. Even if one of them says this page is blank, we still need that page. Very, very picky.
From like someone's savings account, let's say, or
every account that you have that we're going to document, we need all the pages of that bank account, investment account, or whatnot. And if you're divorced, we need your divorce paperwork, divorce decree, separation agreement. Again, all pages.
I didn't even know I had a savings account book. I mean, I know the booklet, your little ledger, but to actually have pages of book, nor for a checking account or even a savings account. Very fascinating.
But let's switch gears and talk about self-employed before we go on, because I know there's so many self-employed people listening.
Give me 1 second. Folks, you are listening to Mortgage Matters Radio Show with Rob Weinberg. I'm Gary Byron. Their phone number, in case you're interested, write this down, 860-413-3938. Go ahead, Rob.
Absolutely. So talking to self-employed, the documentation requirements are going to be different. And I know a lot of self-employed people have a lot of trepidation and they get worried about applying for a mortgage. Maybe they were denied before. Maybe they were inundated by the amount of paperwork. So I'm talking about right now what's required is you're going to want to have 2 years of your tax returns. Some loan programs only require 1 if you've been self-employed a long time, but be prepared with the most recent 2 years of your federal income tax return. The next thing is going to be bank statements for your business. Right now, underwriting is looking at the most recent 3 months bank statements due to COVID. They want to see that you didn't just have a good year in 2019 and your business went belly up during the pandemic. We got to see the most recent 3 months. What do you have coming in? Is your revenue or your deposits in that bank account in line with previous years? If we're using $100,000 a year and you're only depositing $3,000 a month in your bank account, huge red flag. That's why the bank statements are required. And last but not least, for the self-employed right now is going to be profit and loss statements. So they're going to want to see a year-to-date profit and loss from January of this year through whenever you're applying for the mortgage. It doesn't necessarily have to be audited. It can be written up just on a simple spreadsheet, but that'll show, again, that you're in line with your income versus your expenses, and it'll help to support that when you're self-employed. You can print a lot of this stuff out of a QuickBooks program or an accounting program. A lot of my self-employed clients have their accountant set up, and they'll just send an email and say, hey, I need this, this, and this, and the accountant can print it very, very quickly.
How would you know